Hello everyone, happy Wednesday afternoon. Hope you're all well. The sun has been out the last few days, a bit cloudy today. Getting through lockdown and things are moving and picking up. Hope everyone is looking forward to Easter for those that are on holiday now, and for those that aren't, hopefully you'll get a nice bank holiday weekend. How are you doing, James?
Yeah, very well, thanks, Rob. Was able to get out for an inspection yesterday in the sunshine, so walked back to the office. It was brilliant day, thank you. How are you?
Yeah, really good. On the back of playing football again, Monday night, Tuesday night, super happy about that. For all of you sporty people out there, it is a world changer, life changer just to be playing competitive or active sport again. Really, really good. So very, very happy about that. Right, where are we in the market this week, James? It's been nice and busy, lots of work outside, which is positive. And what does that tell us? It just means there's lots of activity out there, which is good. I think there was a bit of a dip a few weeks ago. It was a bit quiet. Things are picking up and there seems to be good volume leading into the Easter break. So as always, let's go to the handout on the right-hand side. This is week 12 sales and data. Let's see what the story is telling us. It's been pretty consistent over the last month or two during January and February and moving through March. Where we are today is week 12. If you open up the attachment on the right-hand side, if you're able to do that. We have new instructions 369 this week, which is positive. It's a very nice level, very consistent. Week 10, 11, 12, very consistent. As we said, once lockdown restrictions are relaxed and once the schools go back, we expect that to continue being strong, especially with the government incentives that are currently in place and will be in place for the next 6 months. So that's very positive. Also, the sold figures, very consistent, everything above 200, very solid numbers. And again, we saw a little bit of a dip because of the December and January period, the strict lockdowns and the Christmas period. But we're slowly coming back to stronger numbers. And we do expect after Easter, after the next round of restrictions being dropped on April the 12th, following the holidays, we expect strong sales activity for the remainder of April and May and June, all the way through, whilst the incentives and the stamp duty holiday are in place. Finally, for today from me, before we go to James, just want to go to our 2, 3, 5, 10 million numbers. As you can see, already in March, we have superseded all of the numbers for the previous months, January and February. And I think that just shows how robust the market is in your prime, super prime, central London, home counties, and surrounding areas. The 2, 3, 5, and 10 million have all superseded the previous months and really, really strong figures. And that's what we're seeing. So, it's one of the core areas we work in. One of our core markets is prime, super prime. We are seeing increased levels of activity and strong performance in that area. And those numbers, that's the March 22 figures, really show how strong that market and that specific space is performing, and we can see that continuing for the months ahead. James, anything you want to add, or anything, any other nuances that you're seeing over and beyond what we've just reported?
Yeah, thank you, Rob. So as we can see from the data, this has been fairly consistent over the last couple of months. Some of the key indicators, we've got new instructions and sold figures. Like we say, these have consistently been over 200 on the sold figures. I think this is important. It shows that there's underlying demand in the market, and it's held steady. It's been very resilient over this 3-month lockdown, and I think this really has been probably the toughest of the lockdowns. But I think not only in the property market, but outside of that, there is some positivity coming out of that, in hope that it will be the last of the lockdowns. We have vaccine numbers being very strong in the UK, extremely strong in comparison to the rest of Europe. So I think there's positivity not only coming out of the property market, but in the wider built environment. And obviously we've been sort of hottest March on records for the last is it 50 years, I believe, Rob. So I think there's lots of positive angles at the moment, with the market being primed to come out of this lockdown with some positivity.
Yeah, on a more generic level, mortgage approvals are still at really high levels, taking a 10 to 15 year view. The Bank of England numbers were released last week, and they're hovering around the 90,000 figure. We did breach the 100,000 figure at the back end of last year, as we mentioned and discussed. And for me, that's always a really good indicator of the volume that's going through not only your mainstream lenders, your high street lenders, your factory lenders. I think you also have an indication of what your challengers and your bridges are doing at the same time. But one thing I've noticed in the last month is that the bridging challenging market has just stepped up from where they were previously. And what that tells me is that there's a degree of comfort about where the rest of the year is going to go. There's a degree of certainty from a lending and risk perspective. And for that reason, the bridging and challenger bank market is starting to see an upturn in volume and transactions that they're producing. I always think that's a good now underlying viewpoint when you're doing short-term lending. It shows that there is good activity and good sentiment in that sense. So that's something that we've seen in the last month, and I think again that's a real reflection of market conditions that we are currently seeing.
Yeah, just a further rebuttal from your point there, Rob. Like I said, I think for February we were at around 90,000 on the mortgage approvals. Just to bring you some statistics for the sort of years of 2018, 2019, these were about 65,000 average per month. So just to give you an indication of how much more activity there is in the market from those years.
Yeah, I it's so interesting that 1 year ago we were here having the conversation with big concerns around risk and credit and sanction, concerns and mortgage approvals for March to May of last year, tanked to the lowest levels since Lehman's crash 08-09, and there were major concerns about the sustainability of the property market. Now, the residential market has performed over and beyond. And what we're seeing is that's not just the UK trend now. The latest figures came out of the US this week that confirmed a similar story. And other major economies are seeing a real strong residential market upturn. So I think that trend isn't just a localized or a UK trend. It's something that major economies are seeing because sentiment is driving residential activity. At the same time, the commercial activity, and when I say commercial, I mean hardcore commercial, whether it's hotels, high street, office space, everything outside of your core logistics distribution market has really suffered. Caveat or comment, and at the same time, we're now seeing an upturn in volume of the commercial activity. I would say now the green shoots of commercial activity is being seen, and I think that's a positive for everyone commercial focused or commercial lending to understand that that's going to start moving now for the rest of the year, and we are seeing an upturn in activity in the commercial books that we are overviewing and overseeing, and which is again, a positive sign.
Yeah, just whilst we're talking about the commercial market, Rob, just to bring you a hot off the press deal. Deloitte's Midtown office at Athene Place, 66 Shoe Lane, has just sold a deal for £255 million, with that office extending about 147,000 square feet. The building was acquired by the Wing Tai Property Limited, a Hong Kong-based real estate company. I know that Deloitte did vacate the property in 2018, with the property being refurbished and now pre-let to its former occupants, Deloitte forming part of their Midtown campus. The area is a building I used to work in, actually, but the very well located area in Midtown. It's got the tube, it's got rail links, it's also got the Crossrail Elizabeth line access. I think the deal brings some positivity to that city office market area.
Yeah, I think we're going to see more and more of that. I'm seeing the activity for relatively big size, big ticket transactions and deals happening on a weekly basis, and you just feel that things are moving. I do like the sustainability and the robustness of the residential space, and although a lot of the indices and the house price indexes are a bit skewed at the moment because you've got this dip from December and January that's one clear and obvious because of the break and the strict lockdown. So you're just seeing a little dip, but I think we're going to see some more normalized levels, or the market will find its level to which we will report in the coming months. But I think that level is going to be a more positive level than it was pre-COVID for the coming months, and probably similar to what they were in January and February of last year when we had that Boris bounce. So I think that's a really key area to watch, residentially speaking, and the upturn commercial, both in the transactions and as people start returning to offices. I think you're going to see an upturn in transactions and an upturn in new evidence coming to the market and performance. And just to go on to one of our nuances, and again, it's buy-to-lets against HMOs. I think that's been a real interesting space for all of you in that lending area. I think the buy-to-let investor has come under so much pressure during COVID and lockdown, and we are starting to see some of those investors sell off and relinquish the asset and take in some cash and relook at their investment strategy to maybe go into different areas, different sectors, or start focusing on the more labor management intensive HMO work just because of the returns that can be found in the market. And also at the same time, we've seen a lot of light heavy refurbs. I think that's a really great lending market. A lot of the mainstream and the challengers really like that product where you're enhancing the value of an asset. So that's just some of the trends that we've seen strengthen or weaken during the months that have gone by. What else have you got for us this week, James?
Well, I was just going to say, anyone that wants further information on that, please feel free to email me. But let's turn to handout 2 here, just in terms of a bit more of a breakdown on transaction volumes in the market. We've got this data, it's courtesy of Rightmove, but it gives us some information on the percentage increases in sales agreed, and it just breaks down some of the unit types from detached houses to semi-detached, and it indicates the uplift in the transactional volumes in each of those areas. Now, as a whole, transaction volumes, as we brought you, they've increased. We've seen mortgage approvals skyrocket to over 100,000 at the end of 2020. Now, it means that across all property types, there's been increases in transaction volumes. We just know from this graphic, flats have increased by 15%. However, detached houses, those 5-bed detached houses, have increased massively, 38% increase in transaction volumes there. Semi-detached houses also, and terraced houses. Those properties with larger gardens, detached houses, are the ones which have seen the largest increase.
And that that's a statement, that's factual, that's hardcore data, and we can absolutely confirm that the level of activity and the demand that there currently is as of today, of the stuff that I've even personally seen this week, is that product of 5-bed, 4-bed detached house. And also, I'd have to say, the larger semi, it's just in demand. People are now taking the view that's the core product, that's the one that everyone wants. That's seen the upturn in volume, in transaction, in evidence across the board, whether you're looking to buy in the suburbs, or whether you're looking to buy in the home counties, or whether you're looking to buy in a Holland Park or a Notting Hill. It's that larger footprint, 4-5 bedroom, detached or semi, and as the document you've just shown also shows bungalows. And that's seeing big demand and large transactional evidence. This is clear as yesterday was, because the day isn't so clear. That's where people are moving, that's where the transactions are, and that's what we consider will continue as a trend. It's so clear, and the evidence and the facts and the data and the intel keep on sending us down that path, and that's what we're sharing with you very clearly today.
Yeah, we've got handout 3 as well. This underlines the market changes in terms of renters, in terms of their priorities. We've seen that renters now, 1 and 2 bed flats are far less popular. People want 2-bed bungalows, 2-bed terrace houses, or possibly even semi-detached houses. So those trends have not just been in the sales market, but also the rental market as well, if you'd like to have a look at graphic 3. But in terms of, sorry, Rob, do you have something to add there?
No.
No, okay. Just moving through some of the other data we've got. Nationwide have released their house price growth index for the last 12 months, running up to March 2021. This has slowed slightly to 5.7% annualized growth. So obviously still some very positive news in the market. If you compare their index from February to March, there has been a 0.2% decrease, which I think is very, very nominal. And obviously with these lower transaction volumes, I think that this will more than likely to increase in the month of April, but a little bit wait and see. I think there will be that explosive demand as the agencies open up. Buyers are more active and are able to have more freedom to look in the shop windows, even sort of go in those non-essential shops. So I think demand will return in April.
Thank you, James. Okay, so what else we got? In terms of lending, pricing, products, I think there's good product out there in the market at the moment, very active. I would say there's some good announcements this week about funding lines from whether it's challenger banks, bridging banks. There's a lot of money that's happy to go into the marketplace, that's making it very competitive, that's allowing for very good pricing and very good activity. So that's strong, and we do expect that to remain and continue from a pricing and product perspective. And as the 95% mortgages start to feed through to the market, again, that will have a natural supply chain stroke distribution and knock-on effect as all of those accessing the 95% mortgages will see transactions pass on to different levels and going up the price range within the housing market in the residential space. What else have you got to close out for today, James?
Thank you, Rob. So to close out, in terms of just reflecting on 2020, there was a real surge in super prime property last year, as we brought you news of, one of the highest ever on record. And there's been some data released in terms of some of the most expensive streets in London on the back of that 12-month data. Just in isolation of that 12-month period, Upper Phillimore Gardens in Kensington currently ranks as London's most expensive house or road to buy on, with houses averaging £28 million there. But in terms of, just to bring you some more wider data from the market, in terms of rate per square foot here in London, what we're seeing in terms of the highest rates currently being achieved. These are in Grosvenor Square and also Chelsea Barracks, some of the new build schemes there. But in terms of capital value, the highest capital value is going beyond that 12-month period. We anticipate that to be Kensington Palace Gardens, the private roads running down the western side of Kensington Gardens. So just to reflect on some of the super prime data which we've got from last year, it's going to be interesting in 2021 how the surcharge on foreign buyer stamp duty will impact, whether that will possibly dampen the super prime market, or whether that will continue to flourish with more activity than ever.
Yeah, thanks for that, James. So to wrap up for this week, we've got the RICS's announcement on cladding, which we're going to touch on next week. That's just an ongoing piece, and it will continue to be ongoing. We've got the latest data that we've just shared with you from the Bank of England at mortgage levels. We've got the latest transactional volumes and intel that we've discussed and provided, and giving you an up-to-date figure of where we're seeing those trends and the volumes that are going through the market. Any of that information that you want to receive and you haven't received, please contact us directly. And after Easter, we will be back again, and we will have some guests and special guests from our friends at Lunres, from leasehold enfranchisement specialists, to talk about the short lease and specialisms within that market. And we will be going to one or two of the big new development, new build schemes in London, and provide you some specialist updates from there. So stay with us, keep watching, keep supporting, keep asking the questions, and we will keep giving you all of the answers. And thank you for all of your help and support across all of our platforms. It is very much appreciated. Thanks for everything this week, James. Have a great Easter, have a great holiday, and we will see you all same time, same place next week. Take care, everyone. Thanks, James.
Thanks very much.